And we're live. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is a pop-up. This is for my Carter Cow Academy group. Anybody that's a part of the Carter Cow Capital business group that has signed up for it. So excited to be able to talk to each and every one of you. Before we end up getting started, we're going to go ahead and go through the disclaimer. Like always, I'm not a CPA, so I'm not going to tell you whether to buy or to sell. But what I will do is be able to give you education so you can be able to make your own informed decision. Now, understand that Forex trading involves risk. That means that you have the risk of being able to make or lose money. So just understand that. And past performance is not indicative of future results. So while you're trading, make sure that you end up trading under your own risk. So with that being said, this is one of the first times, or not necessarily the first times, but one of the times where we actually end up popping up and we talk to each and every person that's actually in the business section of Carter Cow Capital. I'm very excited to be able to talk to each and every one of y'all. And what we're going to end up talking about is something that is near and dear to me on the way that we end up trading, because it's very important to what we end up doing. So just understand that this is what the banks are not telling you when it comes down to your overall income. And I want to be able to make sure that you can be able to understand how to be able to take back your overall power and be able to use that to your overall advantage. Okay, so just understand that while we're going through this. So with that being said, if you're not a part of the Carter Cow Academy group, in which I'm going to have this recorded so you can be able to send this over and be able to see it yourself, what you can be able to do is that you can go to cartercowcapital.com /start here, be able to sign up for a free webinar. You also can be able to get my book, Success in Forex, and be able to learn from there. That's everything I wish I would have learned within the first 90 days of overall trading. And please make sure that you end up supporting what we're doing here. You go to like the Carter Cow Capital business page, and please make sure that you end up sharing and subscribing to the Carter Cow Capital YouTube page. We are really starting to ramp that back up. Really don't have that many subscribers, but have a lot of great content out there, and I really wanted to be able to push it out so people can be able to learn this information, because it's very powerful that you end up understanding it yourself. So with that being said, let's go ahead and hop into it. Now, what we're going to end up talking about is compound interest. And I don't know if a lot of people understand this, right? There's a lot of stuff that you can be able to learn by being able to have compound interest. It's very powerful. Jordan, how you doing? I hope everything's going well with you. Compound interest is very important to what we end up doing here at Carter Cow Capital. And I want to make sure that you can be able to have that same type of understanding about that. Sam, what's going on? Hope everything's going well with you. Now, understand this. Albert Einstein ended up saying about compound interest, he who understands it earns it. He who doesn't pays it. Okay? So understand that statement. Everything that we're going to talk about is going to tie around that overall statement and being able to go from there. Now, everybody wants to be able to make huge profits. Everyone wants to be able to make huge profits, right? That's the overall goal of what we're trying to do. But understand this. How do we go about being able to do that? What do we do from an overall investment standpoint, or what have we been told to do from an overall investment standpoint? Well, the first thing that I was told was that you have to put your money inside of a savings account. Let your money be able to work for you. Now, answer this question for the people that are on or watching this live. Raise your hand if you have money inside of a savings account. Right? A few of you. Okay? So as we're going through this, think about this. The percentage of what you're getting back on your return of your money being placed inside of the account is 0.09%. That's not even 1%. It's not even 1% on your overall money. So it's going to end up taking you years upon years to be able to get a great rate of return. However, if you own a credit card, the overall interest rate that you owe when you end up missing a payment, or if you end up having a balance that's out there, on average is 16.27%. Okay? Well, let's take a look at another example where they end up saying, okay, well, place your money in CDs, right? Put your money into the bank. Once again, let your money be able to work for you, right? Well, the average interest rate on CDs, and this was based in April. This is Goldman Sachs, and what they end up doing for us there is you get a 1.85 interest rate on a CD, okay? And that is a part of a 2-year CD where you have to have a minimum balance of $2,500 inside of your account, right? Once again, you're not really making that much money on your money that you're being given to place in, right? How are you going to be able to create compound interest? However, if you end up getting a personal loan, then that means that you're going to end up paying 10.3% on average on that personal loan that you end up getting out, right? Now, some personal loans can be able to range from as low as 4 to 36%. I have 6 because that was the information that was placed online that I ended up taking a look at. But I know I ended up getting a personal loan from my credit union for 4%, right? But they also look at your bank score and see if you can be able to pay that money back, right? So if we go through there, okay, well, what's another option? We look at, well, what about life insurance? We can be able to place money in on our life insurance and be able to get some type of interest rate back off of that. I know personally, from my overall standpoint, I get 5% on the money that I end up placing in on my Flex paid up rider. Well, in this case, that's good. It's better than what we end up getting. But if you turn around and have to take a loan out on anything that has to do with your life insurance policy, on average, it is 10.5%. Well, what am I trying to prove to you at this point? The banks and the other lenders are trying to take advantage of you due to your lack of knowledge and willingness not to invest in yourself, right? You have to be able to take back your own power on the money that you end up earning for yourself, right? Be able to use that to be able to create compound interest for yourself, and don't give someone else that opportunity to be able to do so. He who understands it earns it. He who doesn't pays it. Right? You are basically paying for, if you have to take money out and loan somebody, double the amount that you're actually getting back. To me, I think that's unfair, right? But that's the world that we live in. So let's think about this. You have to be able to control your own finances and become an individual investor. Well, how we end up doing that? What can we be able to do from that standpoint? Well, you can be able to invest in Forex, stocks, and bonds. You can be able to get you can be able to do passive income strategies to be able to create some money that's actually in your account and create a good rate of return. Or you can be able to look at low risk to high reward opportunities to be able to create that income from there, looking like real estate or anything else like that. But what I'm going to talk to you about is from a Forex trading perspective. Forex trading gives you an advantage of being able to use 3 things that are very important. You can be able to use margin and leverage. You can use the law of zero risk, and you can use compound interest to your overall advantage. So we're going to end up talking about all 3 of these over the course of the next few minutes. So understand this. Benjamin Franklin ended up saying about compound interest, and he ended up breaking it down like this, and there's no better way to be able to say it. Your money makes money, and that money makes more money. Okay? Simply put, when you're trading and you're trying to make compound interest, essentially what you're trying to do is use other people's money to be able to make more money of your own, right? So understand the way that we do that in Forex trading is by 2 different things. One, we have to be able to understand margin. Margin is the amount of funds that you would need to open a position to be able to keep your positions open. So it's kind of like having a down payment when it comes down to a vehicle, right? Obviously, if you want to be able to purchase a car, sometimes you have to be able to put a little bit of money down so that you can be able to get a better type of interest rate on being able to get in. Steve, what's going on? Hope everything's going well with you, right? But the best part about it is that you can be able to use leverage. Now, leverage is the amount that a broker lends to you so you can be able to trade on a bigger lot standpoint. Now, this is something that really excited me when I first got started trading, because I knew I didn't have that much money to be able to start trading. Typically, when I start off my accounts, I start off with $500 to about $1,000. What's happening is that leverage, because US is given 50 to 1, will be treated as in 50,000 units in value, which means that you can be able to create that rate of return on your overall account by being able to use leverage safely. Now understand this, leverage is a double-edged sword. Now, what that means is the amount of risk that leverage is the amount of risk that you're taking on any trade, which means that it can be gained or it can be lost, right? So it's very important to be able to have good equity management every time that you end up going through and doing any type of trading. You want to be able to understand that you have to protect your assets first before you even take any type of trade. You must be able to understand that you need to have good risk reward ratios before you end up taking any trade that you end up taking. Very important. Now, essentially, what we want to be able to do at all points in time is think like banks. Okay. Essentially, what I'm saying in that is that we want to be able to use little to none of your money to be able to make money. Right? Let's go back to that overall banking situation. And I'm going to give you an example from real estate in general as well. We end up talking about how much money that you end up placing inside of your savings account and how much money you have inside of your account. Essentially, once you end up placing your money inside of the bank account and being able to have that held in, what the bank is actually doing is using your funds to be able to create funds for the bank, right? Create funds for themselves. And then as soon as you end up getting back, then you can be able to, as long as they end up having it, they can, as long as you end up coming back or whatever else, and they don't default in what they end up doing, they have enough money to be able to give back to you. Plus they have that small little profit, right? So let's go through this example real quick. I'm going to end up talking about it from a real estate standpoint. So let's say you end up dealing with two people. Person one end up having a distressed home and they end up paying $100,000 for the home originally. Now, let's say that over the course of the last 5 to 6 years or whatever, they end up having some situations that end up happening and they have to move for whatever reason. And you come to them and you say, hey, I want to be able to purchase your home, and I agree, and let's agree to be able to sell your home at $75,000, right? They end up agreeing, and you end up giving them a promissory note to be able to sign, and you end up saying, hey, I meet you 2 weeks in closing, right? From there, let's say within that 2 weeks, you end up finding another person that's very interested in being able to purchase homes or develop homes or whatever may be the case, right? You end up finding out that this home is in a great value and it's undervalued because of how much you end up getting it for and how much it's actually potentially worth. Let's say you end up finding a buyer that agrees to be able to purchase the home for you for $125,000 at closing. Well, what happens is this, that if you and that person agree to that, right? And both of y'all end up meeting at closing. Let's say you end up going through your first closing. You end up giving the person one a check, buying a home for $75,000. But 3 hours later, after you end up getting the deed and everything else like that, and now the home belongs to you, you end up receiving a check from person number two for $125,000, right? So literally, you did not own the home for not even an hour and still turned around and turned to profit. Now let's think about this. How much profit did you end up making? Well, you sold the home for $125,000 and you bought it for $75,000. So you made a $50,000 profit. But really, how much money did you really use of your own money? Nothing, right? It's kind of hard to grasp sometimes, but you really didn't use no money of your own to be able to get that done. What you end up doing was you were basically the middleman, and you end up finding value in something and basically end up turning it into a profit based off of someone else want to be able to use that home to be able to possibly make another profit off of that. So essentially, from a trading perspective, you end up buying low and you end up selling high. There's no difference from a Forex trading perspective, right? So how does this work when it comes down to Forex trading? What we like to do is that we look at 3 different things. We want to find high probability initial trades on larger time frames. Then from there, we want to be able to use multiple high probability trades on lower time frames to be able to compound on our overall account. And then after that, we end up adjusting our stop loss to break even while the market ends up moving towards our overall landmarks. So to give you an example, let's talk about one of the trades that we're actually in at this particular point as we speak. We end up buying the euro, we end up selling the euro United States on March 9th. Today is April 22nd. So we've been in here we've definitely been in it for more than a month. But we end up getting into this trade at first, and when I first showed that picture, that was 253 pips. Me and my students end up taking this trade, and they actually end up making 700 pips off this overall movement. But the best part about that is that when you go through and you look at how we end up making that 700 pips on these overall trades, we end up going to smaller time frames, and we actually end up taking multiple sales on that smaller time frame. So essentially what we ended up doing was we had one trade that we ended up placing in, but while the trade was actually going down, we was compounding by being able to make other trades that was actually in winning positions because we expected the market to be able to go towards our overall long-term position. So essentially right now, as we speak in this trade, and I want to show you that this is actually real and what we end up doing. So I'm actually going to end up showing you exactly live right now on where we're at for our overall market trading perspective with the Euro United States. Currently, as we speak, I'm going to pull it up right now. Let's see. Just give me 1 second as we pull this up. Currently, right now, as we speak, we're up 600 pips on that first move. We're up another 200 pips on the second move. We're up almost 100 pips on the third move. Right, 200. That's 800 plus another 200. That's 1100 plus another basically 130. So that's I'm talking about 1230 at that point, plus another 50, so that's about 1280, and we have 4 right here, so it's basically almost another 20. So 1230, we're talking about 1250 pips of this move. Now, the more important portion about what we end up doing based off of that overall trading is this, and I want you to understand this. This one move, the first trade that we end up taking on this one, is 1,300 pips towards the downside. We expect for the market to be able to go down 1,300 pips. But by being able to take multiple trades in that overall perspective, now we can be able to say, while we're actually in a winning position, we're using other people's money, in our case, our overall profits, to be able to make more winnings on while it's actually going down, right? This trading strategy allows you to be able to compound your gains over a long-term target while eliminating your overall risk. Every time that we've taken a trade and we've been able to add on and stack to it, what we end up doing was we end up moving our overall stop loss to an area to where we're protecting and canceling out one of the trades that we end up taking. So we have no risk on our overall trade that we end up taking previously. So essentially what you're doing is you're creating large percentage gains on your overall trading, right? I'm going to show you a couple examples of what we actually end up doing, and I want you to focus in on this top chart because the rest of these down at the bottom are our automated systems. Les, how you doing? Or basically just our automated systems for its overall trading. Now, obviously, we end up making huge profits in these, and that's great, right? But we really didn't do any work. Let's talk about the one where we end up doing work in. If you look at the US Japanese yen, we end up trading this one 4 separate times. The first time that we end up trading it, we was up 418 pips on the first one. We end up trading it again. We end up being up 426 pips. We end up trading it a third time, 288 pips. Trading it a fourth time, 104 pips, right? We basically end up compounding our overall trade while it was actually moving down throughout that overall target, allowing us to be able to create a lot of profit while the market was actually moving down. You look at the Canadian yen, we did the same thing. 193 pips on the first one, 148 pips on the second one, right? Got the long-term goals, but being able to stack up on high probability trades. Essentially, what we end up doing just by that trading by itself, we end up making 1,579 pips towards our overall manual style of trading, right? And from a compounding perspective, towards overall trading, creating other income streams, if you have something like an automated trading system that can be able to do the same thing for you while you're actually trading it, it's literally like you having other people that are working for you without you having to do all the work. I want to take away you being able to say, hey, I have to put in a lot of work for someone else and be able to make a little bit amount or a fixed amount of money. Instead of being able to do that, taking back your time and saying, hey, let's be able to learn how to be able to create a system or learn a system on how to be able to compound our overall interest and being able to trade from there. I think that's way more powerful than being able to say, hey, I end up having a job and I work for someone else so they can be able to do it. Literally what we end up doing from this $500 account, we turned it to $986 in 11 days. And we left some money off the table. And I'm just being honest with you, right? That's a 50.7% rate of return on one trade in 11 days, right? Now, obviously, past performance is not indicative of future results. So sometimes that does not happen, right? But I can show you right now, but I'm literally in a couple trades as we speak with the pound United States dollar where we're doing that same style, right? Literally what we end up doing for us, our overall trading strategy is that we end up looking at those overall opportunities that are high probability. and we end up trading them knowing that we can be able to compound all the way down towards our overall movement. Just give me a second so I can be able to show you what that actually looks like, right? Currently, as we speak, we're actually in the pound United States dollar trade. And if you look at it just from an overall perspective, we have 1, 2, 3, 4, 5 different trades right now. Obviously, we're down on the US Swiss franc. That's actually early in the move, but you can look and see 170 on the first one, 132 on the second one, 134 on the second one. I mean, the third one, 131 on the fourth one, 43 on this one, right? 590 pips by itself. Right? Once the U.S. Swiss franc, if it starts to move towards its overall position and it starts getting into a profitable position, we can be able to do the same thing, right? We're using that same style to be able to trade on this. Let me show you something that we end up using to be able to make that happen. So what if I could tell you that before we end up taking any trade that we end up taking, or any trade, before we end up considering it, it has to be able to, one, reach our overall criteria about how much of a percentage of success we need to be able to get, right? What if I could tell you that if we end up taking trades that have a 70% chance or greater, if we have something that's 70% that are or greater on being able to do it, then we look to be able to take the trade. If it does not fit that criteria, then we don't look at it at all, right? We use this in our 5-star setup. In our 5-star setup, what we end up going through is that we end up going through our trade and we look at overall alignments that basically work in. So we're looking at multiple time frames to see if they align. We end up looking at what our risk is going to end up being, what our reward is going to end up being, and seeing what we can be able to get on a single trade gain, right? And if all of that stuff ends up meeting our overall criteria, then we look to proceed to be able to take that trade. But the best part about it is, if we decide to be able to take that trade, then we know exactly what we're going to end up adding on towards our overall lot size, what's going to end up being our margin that's going to end up being a part of it. We end up understanding what's our potential growth that's going to end up being, and our probability of success. Now, if you can be able to take trades that have 90% above success on each and every time that you could be able to get in, then I think you will feel way more comfortable in being able to pull the trigger on being able to trade, right? Think about this one. This pound United States trade that we're actually going through right now is literally within this second phase as we look at it right here, right? And currently right now we're looking at being able to go down to the third phase, and we know automatically how much we want to be able to place in. But if the market ends up moving all the way down to where we think it's going to end up going, which is 1,300 pips from that movement, we're talking about a 20% gain turns into a 103% gain, right? Think about that. Literally, with a $2,000 account, you literally just doubled your account by using very little money, right? Very little margin to be able to start off with, and you basically end up doubling your account in, let's say, a month, 2 months, somewhere right there. Now, once again, past performance is not indicative of future results, but we have 4 different trades right now that are aligned in that position, right? And if you take a small loss, to give you an example, we're looking at the US Swiss franc, you end up seeing that we was actually down on that trade. If we lose on that trade, we only lose $75, right? But if we win on this pound United States trade, you're talking about every bit $2,000 on that overall trade. Now, tell me if you will end up taking that trade over and over again, right? Tell me if you end up taking that opportunity, if you knew that you end up having that good probability of success. I think most of y'all end up already knowing that answer, right? 50% in 11 days on 2 trades that we end up taking, right? Stop letting the banks be able to take, and the banks and other lenders take away your gains, right? They're doing the same thing that I'm just talking to you about right now. Gain the education and mentorship with data-proven strategies that ends up working, so you can be able to have this overall chance to be able to create income on your own, right? I literally work in shirt and shorts now because obviously I'm a school teacher, but literally if I wasn't a school teacher and everything else like that, I'm literally in my office and I'm making money in my office in shirt and shorts. Right? I don't have to go outside. I don't have to do anything. My bathroom is right there. My refrigerator is right here. My kitchen is back here. Right? I don't have to do anything. Right? Put yourself into that position and be your own boss. No one can be able to fire you. Right? No one can be able to fire you. Right? So if you're interested in being able to learn more, what we end up doing is this. We have weekly videos and courses that we end up going through. We end up giving daily support, and we have mentorship with our overall courses and classes that you're interested in being able to go to. All you have to do is go to cartercowcapital.com/start here and be able to learn a little bit more about what we end up doing. Or you can be able to go to our business page, which is Carter Cow Capital Inc. on Facebook, or you can be able to email me and be able to learn a little bit more information about that. I would like if you would support what we're doing with our Facebook. Our Facebook page, obviously our Facebook page, but our YouTube page, and being able to help us jump off with that and being able to get everything started. But if you're interested in being able to learn a little bit more about the courses that have all of this capability and being able to do it from a manual perspective, you can go to cartercowcapital.com/Fibonacci fundamentals, or you can go to cartercowcapital.com/precision entry point. Now, I do appreciate each and every person's time that end up sitting here for the 25 minutes that we end up going through. Typically, once again, when we end up doing pop-ups, I don't tell anybody when we end up getting started. If I feel that I need to talk to everybody and give them an opportunity to be able to learn something that we end up doing well, then I think we end up going through that. But I do appreciate each and everybody actually end up doing that. One other thing, each and every morning, you're interested in being able to learn a little bit more about what we end up doing, you can hop into our Trade with Travis classes. Typically, we end up doing that from Monday through Friday at 8:30 a.m. to 9 o'clock. All you have to do is just like the business page, subscribe what we end up doing to our YouTube page, and just hop on and be able to learn while you're actually going through. You're basically earning while you're learning. You're basically earning money while you're learning and actually going through there and learning mechanics. But until then, like always, plan your trade your plan. Everyone, y'all end up having a good one. See you 8:30 in the morning for Trade with Travis.